Hello everyone, welcome to our YouTube channel Finbuzz Learning. Here we are again back with a very popular topic that you guys might be knowing. Today we will be going to discuss fixed deposits in detail. So what exactly is a fixed deposit? So fixed deposits are one of the most well-liked methods for saving money. They provide strong returns, are risk-free investments, and are simple to open. In a fixed deposit, you put a lump sum amount in your bank for a fixed tenure at an agreed rate of interest. At the end of tenure, you receive the amount you have invested plus compound interest. A fixed deposit, which is also known as a FD, is a financial product offered by banks or NBFCs that, up until the specified maturity date, offers investors a higher rate of interest than a typical savings account. It might or might not call for the creation of a different account. FDs are also known as term deposit or time deposit. Well, almost all of India's major banks offer a variety of fixed deposit arrangements. For risk-averse investors, a fixed deposit is the greatest option because it allows them to collect interest on the amount placed over time. Your funds are secured the minute you deposit them, and you can withdraw the interest at maturity. Now we will be discussing the types of fixed deposits in India. So, different banks in India provide numerous types of fixed deposits, which are typically referred to as products. The two main types of FDs, however, are cumulative and non-cumulative. In cumulative deposits, the interest is paid at maturity along with the principal amount rather than during the currency of the deposit. In contrast, interest is paid along with the deposit's currency in the case of a non-cumulative deposit. However, the interest rate is the same for both programs. Interest on non-cumulative deposits is typically paid every 3 months at a lower rate, if it is paid monthly. Additionally, you have the option of receiving interest payments on a monthly, quarterly, half-yearly, or annual basis. If applicable, interest is compounded quarterly in case of cumulative deposit. Talking about the popular fixed deposit account types offered in India, so banks offer various fixed deposit programs. Let's take a quick look at the FD types. The first type is Standard Fixed Deposit. It is the common FD program offered by all banks. Some of the characteristics are, in this type of FD, money is deposited for a fixed tenure. Tenure can range from 7 to 10 days. The rate of interest is predetermined by the banks and rates are higher than the saving account. The next type is tax fixed deposit. So these deposits, as their name suggests, help to reduce taxes and are accessible at practically all banks. In this, one can get a tax exemption of up to Rs 1.5 lakhs in a year. These FDs have a lock-in period of 5 years during which you cannot withdraw the amount. Only one-time lump sum deposits are allowed under this FD. Now, the next one is Special Fixed Deposit. So, these funds are invested for set duration of time, just like standard FDs. The main distinction is that you will receive larger interest than with standard FDs if you don't withdraw the money for the allotted time. Now coming to the next type is Regular Income Fixed Deposit. Well, this kind of FD is the ideal option for you if your income is small and you rely on the money from bank accounts to pay your monthly bill. You can opt for either a monthly or quarterly interest payout. The next type is the Senior Citizen Fixed Deposit. So, citizens older than 60 years old can open an FD account under the Senior Citizens Fixed Deposit Scheme. These FD program offer an interest rate that is approximately 0.50% more than the standard interest rates. This plan also allows for adjustable tenures. The other type is Flexi Fixed Deposit. So this type of FDs are linked to your saving account. You can create an FD with an initial deposit of your choice and link it to your saving account. You can also limit your saving account and any excess will be transferred to the FD. Now we will be discussing the benefits of fixed deposits. Fixed deposits are ideal for risk-averse investors, which explains why they have historically been one of the most popular options in India. However, we will also talk about a number of other significant advantages of FDs. The first advantage of FDs: guaranteed returns. Since the RBI regulates banks, fixed deposit FD accounts offer guaranteed returns on your investment. As a result, these investments are less risky than other types of investments, and investors also earn a fixed rate of return on their investments. The next one is higher interest rates. Comparatively, fixed deposit schemes offer a higher rate of interest than other traditional investment options like savings account and recurring deposits. The next benefit is tax benefits. According to Section 80C of the Income Tax Act of 1961, investors may choose to invest in tax-saving fixed deposits in order to receive tax benefits up to Rs 1.5 lakh. However, the lock-in period for the majority of FDs offering tax-saving benefit ranges from 3 to 5 years. Now coming to the next benefit is online FD account opening. Takes only a few minutes for depositors. You can apply for the chosen FD by simply logging in with your net banking or mobile banking if you already have an account with the bank where you want to open one. Using an offline FD calculator, you can also determine the returns of various FD schemes and select the one that delivers the best interest rate with the least amount of paperwork. The next benefit is a loan against fixed deposits. FD is a reliable tool to have on hand in case of monetary difficulties. It's fairly simple to obtain a loan against a set deposit. Depending on the bank, you can borrow up to 95% of the fixed deposit's value. It is therefore a reliable investment. Now coming to the disadvantages of fixed deposits. So the first limitation is reducing interest rates. Despite the many benefits of fixed deposits, interest rates do not follow inflation. This indicates that in some situations, their income may be lower than the rate of inflation. The appeal of these investments has decreased as a result of the recent decline in fixed deposit interest rates. The next one is locked-in funds. Well, your money is secured in fixed deposits for a predetermined time, unless you prematurely withdraw the funds. You cannot use these funds. Fixed deposits have very little liquidity and are difficult to turn into cash. The next disadvantage is penalties on withdrawal. So depositors who prematurely withdraw from their fixed deposits are penalized by the banks. A lower interest rate serves as the punishment. The next is no tax benefits. So the taxable income of fixed deposit holders is increased by the interest received. Interest earned is not subject to a tax deduction. Senior citizens do, however, qualify for an interest deduction of up to Rs 50,000. The last limitation is fixed interest rates. Well, throughout the whole time that a fixed deposit is open, the interest rate is fixed. The bank does not provide the depositor any more interest even if interest rates rise. So this was all about the fixed deposits. Hope you guys now get the topic properly. Do like, comment and share this video, and don't forget to subscribe our channel Finbuzz Learning. Thank you for watching and have a wonderful day ahead.